They probably will start with gold and end with Bitcoin. I remember people saying, well, World War I started on horseback and ended with airplanes. World War II started with airplanes and ended with atomic bombs, right? World War, trade war, World War Bitcoin of the 21st century will start with gold and it'll end with Bitcoin.
Hey guys, welcome to Everyday Finance. As fiat currencies falter and established economic structures fall apart, central banks are fighting to keep control of the global financial system. Gold, an age-old asset and a representation of timeless value that highlights the brittleness and dishonesty of contemporary financial systems, holds firm amid the chaos. Gold is important, but it's just the first step. The true transition from conventional monetary systems to a digital revolution spearheaded by Bitcoin, according to Max Keiser, is just around the corner. Major upheavals, such as the technological advances during the world wars, occur swiftly and irrevocably, as history has demonstrated. Similarly, central banks hoarding gold will give way to the unstoppable rise of decentralized digital assets in the current financial conflict. This is a real-life situation that is already happening. Bitcoin is positioned to become the ultimate store of value and the cornerstone of a new financial era, while gold will act as a temporary safe haven. The biggest wealth transfer in human history will occur when the old system collapses. It's not a question of if, but when. The decision is straightforward. Embrace the future of money or stay tied to a broken system. Let's watch Max Keiser's stirring interview as this historic shift picks up speed.
Yeah, they definitely have a commitment to Bitcoin, and elements within his government are very committed to Bitcoin, like Cynthia Lummis and maybe Ted Cruz and Matt Gaetz, maybe. But of course, there are other competing elements, and he launched his own coin, which predictably did not do well, and so there's a lot of cross currents going on there. And so I always say there's 5 stages of Bitcoin awareness. The first stage is, wow, I just discovered Bitcoin. Here's how you fix it. 2 is, oh, I love Bitcoin. Take my shitcoin. 3 is Bitcoin is a medium of exchange. 4 is Bitcoin is a store of value, and 5 is Bitcoin hyper Bitcoinization. So everyone kind of falls into one of those 5 categories. So Trump is kind of in stage 2, where it's like, I love Bitcoin, take my shitcoin, right? So he's on stage 2 of 5, and hopefully he'll get further down the road. Oh, a lot of states are doing really well. I think there's 9 states where they're putting Bitcoin on the state's balance sheet. So in the United States, you see this often, where whether it's the marijuana, medicinal marijuana started off as a states' rights issue, is kind of working its way up to a federal level. So the states have the power to create federal policy over time as well. So there's a lot of activity on the states. Sure. Well, left-wing policies tend to be run on government programs that are funded by printing money. So if you have money that's outside of their control, they cannot fund these government programs, and therefore they lose power. And it's come out, I think we can say with a lot of, assurity that a lot of the things going on with the Democrats in terms of just sending out checks, buying votes, and buying programs, it's all with printed money. So once you take away the money printer, you can't do any of that stuff. So I can understand why they would be fearful of Bitcoin.
See.
Yeah, there's always a classic divide between the free market on the right and the state-run government models on the left. And the state-run government models, they love issuing papers and issuing theoretical academic studies, and they love Keynesianism, and they come out of the university system where they're academics, and then they transition to government studying economic academia, and they have theories about what's fair and what is equitable, and then they use the power of the state to impose these theories. And of course, that never works. It never has worked ever in the history of the world, that governance model such as that. And it always ends up going back to market-driven economies. And we mentioned gold earlier. And as these central banks are having trouble around the world and economies are having difficulty around the world, of course, gold is responding because gold is pure price signal in a global economy. And it always comes back to gold. We never went off a gold standard. Central banks always settle in gold, has been doing that for decades. And now that they look like we're heading to a Bretton Woods 2.0, where everyone has to get together and reconfigure the global matrix of trade again, they're going to feature gold. That's how they'll start. But they probably will start with gold and end with Bitcoin. I remember people saying, well, World War I started on horseback and ended with airplanes. World War II started with airplanes and ended with atomic bombs, right? World War, trade war, World War Bitcoin of the 21st century will start with gold and it'll end with Bitcoin. Bitcoin is a movable feast, right? And you can memorize your seed phrase and go anywhere you want in the world. So if the conditions change in the United States, then Bitcoiners can leave and go somewhere else. And it's an open market. It's a free market. It's the first time you've separated money from state. That's never, ever happened before in the history of humans. And that means that you've got a monopsony, which is power of the consumer, essentially. So it goes from a monopoly power to a monopsony power, where it's a boycott. For example, a boycott is a monopsony. The boycotters are forcing change on a company by not buying the product. That's called a monopsony. With Bitcoin, you have a monopsony of money. The Bitcoiners and the private keys can simply leave and go somewhere else and do what they want. So I think the state, and I say the following, and I've said this for a long time now: money existed before the state. Bitcoin separates money from state. Bitcoin kills the state. So I think the state, along with the central bank model, is fading into history.
While Senators Cynthia Lummis and Ted Cruz are leading real adoption efforts, Donald Trump displays interest in cryptocurrency but continues to be involved in petty endeavors like Bitcoin-themed coins. With 9 U.S. states already amassing Bitcoin, SATs, grassroots momentum is growing and demonstrating that genuine change starts locally. The conventional financial system, which was established through political manipulation, bailouts, and endless money printing, is also being shown to be unsustainable. A clear reminder of this is the 2008 financial crisis, in which banks received bailouts while regular Americans paid the price. A strong movement that aims to decouple money from government control and overthrow the fiat system is currently gaining momentum. The decentralized and limited nature of Bitcoin is driving a revolution that is already underway as the era of state-issued currency fades. Ironically, the US is getting closer to wider adoption of Bitcoin, while international organizations like the IMF are struggling with its volatility. The true indication of Bitcoin's strength lies not in price charts, but rather in its skyrocketing hash rate and its absolute scarcity. As hard-capped digital assets replace failing fiat systems, redefining value and trust, this represents a watershed in the history of finance. Early adopters have either prospered or been put to the test by the volatility. The shift is now accelerating toward a time when value can flow freely and instantly. The monetary reset is already taking place, according to Max Keiser. The decision is straightforward: either keep up with it or fall behind. As we view more clips from Max Keiser's eye-opening interview, stay tuned for more information.
I believe, if I'm not wrong, that during Jimmy Carter administration, going back to the 70s, I believe he started the FHA, the Federal Housing Authority. And the idea was, well, we're going to subsidize housing. And of course, that jacked up prices and made it unaffordable. So the solution was, again, free money. Same thing with student loans and Sallie Mae. Okay, we're going to subsidize student loans, we're going to subsidize, and it just jacked up prices and made Ivy League education unaffordable. Then under Clinton, I believe, is when they started the liar loans. So they went all these financial institutions who said, well, we'll lend money for mortgages to anybody. Just, again, free printing, money printing. Then, of course, they all got bailed out, which was more money printing, right? So there's never, ever, never been an attempt to solve a problem without printing more money. That's pretty much the history since 1971, when Nixon, closed the gold window. That's what we've had. That's the only solution that's always been up. Now we live in an interesting period now with Trump. He's come up with something new. He's using the tariff solution, right? They're just not going to blatantly print money. That's his idea, is tariffs. But I have a feeling that before long it'll go right back to money printing. You know, in the 70s, they had the savings and loan crisis, and where all these savings and loan went bust because they abused the government guarantees, and then they created the trust where they dumped all these assets into the trust, and then a lot of the corporate raiders in the 1980s got started because they were buying assets from the government at pennies on the dollar, and that was the beginning of the corporate raider era on Wall Street in the 1980s, because they were financed by acquiring massive amounts of heavily discounted assets from the federal government, who had set up a bailout facility to take care of all these savings and loans that had been run to the ground by corrupt CEOs. The Keating Five, Charles Keating.
Yeah.
You know, and then, the 2008 crisis. So here's the thing about it, it comes up all the time, is that the number eventually that they chose, remember they were in Congress testifying, and Timothy Geithner was saying, we need $800 billion from you guys to bail out the situation. And Congress said, well, you got to come back to us with something more than just a slip of paper. Like, we need some analysis on this. And then the stock market crashed the next day, and Congress said, okay, we give in. We'll give you the money. And they wrote them this big fat check for $800 billion for all these lending facilities like TARP and others. And we added it all up. It worked out to some multi-trillion-dollar number that the federal government printed up. And here's the amazing thing about it, is that Obama, who was transitioning to become president at that time, could have very easily done something that historically would have been the norm. He could have taken that same amount of money that eventually was printed to bail out the situation and made every mortgage in America whole and every credit card debt in America whole. So everyone with a mortgage would be whole, everyone with a credit card debt would be whole, and we would start the economy all over again with everyone having been fully paid off. Instead, he took that same amount of money and he gave it to the banks to make them whole. He bailed out the creditors and not the debtors, even though the creditors made those loans on the basis that they were accepting the risk of making those loans. And so he bailed out the creditors. And that historically never ever happens. If you go back even to the Bible, they have the debt jubilee, right? The debtors get bailed out, not the creditors. The creditors are taking the risk to begin with, and if they lose money, then they understand that from day one. But the decision was made to bail out the creditors. So the creditors got to be made whole. And what did they do? They did the exact same thing from 2008 to recently, where they just ratcheted up the leverage in the economy to 10 times greater than it was in 2008. And now we have the global financial crisis that we do now. It had the seeds in 2008 and the failure to bail out the debtors in favor of bailing out the creditors, a pure gift to Wall Street thanks to the Obama administration.
With several indicators pointing to a possible breakout above approximately $95,000, Bitcoin is approaching a turning point, supporting long-held forecasts by proponents like Max Keiser. Strong technical positioning, drastically reduced supply, and increasing institutional interest all point to Bitcoin being ready for a significant rally. With net inflows of almost $2 billion in just 2 days, recent inflows into spot Bitcoin ETFs have skyrocketed, reaching the highest level of institutional demand since January 2025. At the same time, exchange reserves have fallen to levels not seen since December 2016, with less than half of February's peak of 45,000 BTC per day moving onto exchanges. A bullish breakout is set up by this substantial supply squeeze and negative funding rates, which frequently precede price explosions that move higher. Bitcoin is still strong, technically, trading above its 200-day simple moving average at about $88,690, and encountering its last major resistance in the range of about $94,000 to $95,000 before possibly rising above $100,000. A similar trajectory may be developing at this time, according to historical patterns from late 2023 and 2024, both of which preceded rallies of 80% or more. This particular moment, however, goes beyond technical analysis and emphasizes Bitcoin's essential function as a hedge against the unpredictability of conventional financial systems. The record low in exchange deposits is consistent with the hyper-Bitcoinization scenario that Keiser frequently discusses and shows a growing sense of confidence among holders. Bitcoin looks to be poised for its next revolutionary leap, both in terms of price and its development into a dominant global monetary standard, as institutions are investing in it. Retail investors are remaining steadfast, and macroeconomic conditions favor decentralized stores of value. Thanks for watching.